So Gary Black will be joining us shortly, but we're going to be talking about, is there value to FSD? Many people believe that you only will get value to full self-driving once this becomes robo-taxi, and that's where they think the true value will become. But in between, people like Gary Black and others think that only the Tesla enthusiasts, only those folks, 10 to 15% of Tesla stock buyers, will pay the $12,000 or the $190 per month for an excellent driver's assist tool. And so what I'd like to discover today is, do people think that there's actually any kind of value, whether it's going to increase Tesla car sales, or if it's going to increase just the uptake on the FSD, subscription? If you go through some people, and I'll walk us through this, the 5 different levels of before you actually even get to robo-taxi. This is appropriate to discuss today because Elon just posted either last night that he believes that there's going to be 3 significant improvements to FSD, and the rollout is going to be roughly every 2 weeks. And then he says that it's going to be shining really bright by late April or May. So we've now known that version 12.3 is doing incredibly well. People are reacting to it quite excitedly, thinking that it's solving a lot of edge cases. And now the pace is moving faster. Elon's promising his every 2 weeks comment, but for him to say that it actually could be, really shining bright by May, which is really a couple months from now, that's a pretty bold statement. So let's explore, right? Do you guys think that there's value to a not only excellent driver's assist tool, but what if it's safety? It's like significant safety, even before we get to robotaxi. Let's kick it off there. So what do you think, Omar? Do you want to start?
Yeah, I think that FSD and Tesla's AI efforts have to be the most overlooked multi-billion-dollar business that I can remember. Everybody's always saying, oh, well, it's not a robo-taxi, but there's tremendous value in non-robo-taxi functionality. Tesla first unveiled autopilot in 2014 with Mobileye. They started launching their own autopilot system in October 2016. So, for 10 years, has autopilot been useless? No. It's been one of the main features that people love about their Teslas. So there's no doubt there's value. There's value in the active safety features that prevent you from crashing. I mean, I posted some clips. Somebody was going to drive into a crowd. Somebody was going to drive into a lake. The AI in the car today, it's not robo-taxi, but it's good enough to stop you from driving into a lake. It's good enough to stop you from driving into a crowd. It's good enough to spot a pedestrian or a car in front of you when you missed it. I mean, how many times have we all been saved by a little forward collision warning, a little beep when you're driving manually that, hey, the guy in front of you is slowing down a little faster than anticipated? So there's no doubt there's enormous value there. And I think it's overlooked that pretty much every Tesla user around the world is a user of autopilot because it's included for free on the car. So we have last year a situation where the Tesla Model Y outsold the Toyota RAV4, the Toyota Corolla, cars that are a fraction of the price. So how is it possible that an electric car, a Tesla of all cars, could do that? I think a big part of the story is autopilot. I think if you surveyed the broader user base, they are probably overwhelmingly using autopilot on highway drives. And it doesn't take much to explain to them, okay, this is what you're using on highways. Here's the city streets version. And I think if you send out a free trial, it's not really that hard for them to know how to use it because they're already using it and they could convert very easily. So really, I think it's a material part of the product sold today. You can't really even look at the auto sales in isolation because it's such a big part of the value proposition of the product, especially in Southern California, where you're on the freeway in traffic jams all the time. You just see so many Teslas there, and I think basic autopilot being standard is a big part of that. Now with FSD 12, I think for the first time we have a consumer grade product that people will pay extra for to get that city streets functionality, and it's actually comfortable enough and they've gotten the rate of interventions down enough that I think this and subsequent updates is going to be the first time that before robotaxi, you have a large number of people who want to buy it. We know that there's around 2 million Teslas in North America that can run FSD beta based on NHTSA recall notices. And we know that there's 400,000 to 500,000 users. So of the people who can run it, 20 to 25% are running it. And I think that within the next 12 months, we could get that to 40 to 50% of the eligible users. So that would mean crossing 1 million users. Before robotaxi, that potentially is going to be material. And I think that as people see, for example, Smart Summon running on the V12 stack, FSD beta driving driverlessly in parking lots on their own car for the first time, they're going to start to believe that their car could be driverless too. It seems like they have a really strong proof of concept that it may actually be possible to take these cars and make them driverless with the FSD 12 series. So I think that potentially just changes the market's perception and goes from Tesla being sort of a commodity EV to being a sort of highly differentiated product, where it's really the only car you can buy that runs FSD right now. And obviously, if you can actually get it to robotaxi, I don't think that anybody disagrees that the earnings that would result from that would just make the auto business look like peanuts by comparison. I mean, just the licensing to other OEMs, I think, could be greater. So really, long story short, there seems to be a strong potential that the adoption of FSD 12 as an ADAS system could help return Tesla back to earnings growth in a period where auto growth isn't as strong as it's been in past years.
Thank you so much, Omar. So Gary, welcome. I set this up because you and Omar have had this back and forth discussing, is there value in FSD? And specifically, as a driver's assist tool, you had a post on X saying that you believe only Tesla enthusiasts, 10 to 15% of Tesla stock buyers, will pay the $12,000 or the $199 per month for an excellent driver's assist tool. And so tell me, respond to what Omar said. What is it that you agree with him and what parts of it you don't agree?
So I rode around last week in FSD V12 with Brad for about 2 hours in Chicago, and it did pretty well. I mean, it's, as Omar said, it's a great consumer grade product. It's a great ADAS product. It's not robotaxi. We get stuck, I don't know, 5 or 6 times in 2 hours, and you had to, either back away from, we got stuck behind a cement truck, we got stuck behind a semi, we tried to go into a parking lot when we hit a road that was closed. So it does very well as a I don't want to get into levels, but as a we'll call it consumer grade product, an ADAS product. But I think where I think a lot of people miss is that it's in everybody's earnings is that. And so what you have to decide is, can it ever get to a robo taxi type product where you can actually put incremental value in? So for instance, in my numbers, I assume, and I look at it cumulatively back to 2018, I say, okay, from 2018 to 2030, how many Teslas will be sold? And I come up with about 37 million. I use about 12.5% because that's the take rate that I know when Troy was tracking it, that's what it was. And that's a global number. That was the US number. And I'm just assuming that in Europe and Asia you can get the same. I multiply that times $199 a month. I assume, forget doing 12,000 and assume 90% margin, 80%, 1 minus tax rate, divided by number of shares. And I get about $1.90 in earnings. So it's about 10% of the earnings. Now, if you believe, as Omar does, which is possible, the FSD take rate could go up to 40 or 50%, then you could, double or triple those numbers. But I struggle with, at $199, are you going to get a 40 or 50% take rate? If you bring the subscription price down to say $99, you might get a 30 or 40% take rate. But today, even using Omar's numbers, if you have 400,000, you're only getting about 20% of people to actually see the value. And I do agree with him, after riding around, it will get there. And I agree with you. Look, Elon's statement is we're going to have 3 significant upgrades every 2 weeks. I think as this gets closer and closer to what, we'll call level 4, for lack of a better word, where it's 99.9% intervention free, people will find the value to it, but you can't start putting robo-taxi type valuation on it at this point. You have to keep it as a take rate times, number of cars sold times 199 a month, and add that to earnings. And I'm telling, when you go through that, if you use a 12.5% take rate, you only get about 10% of earnings, incremental earnings, which again, I think most analysts, they're like me, they put something in there. So it's not that people think it's worthless. It's just that to get, the type of numbers that Kathy Wood uses, $2,000 price target, you really have to assume a lot of value for robotaxi. But I do think it's a great product, and I experienced it myself. And Chicago's a notoriously hard city to drive around in, but it's not robotaxi ready yet. It's a very good driver assist program, which allows you to be, I don't want to say less attentive, but you can relax a little bit and let the car do most of the work. I agree with that.
Go ahead, Xander, or is it Jeff?
Xander had his hand up first, but
Gary, what happens when the regulators require that? How does your spreadsheet evolve when regulators require that FSD be the status quo?
I don't know why that would happen, Xander. I mean, you've got a lot of people trying to come up with a ADAS system. I don't know why the regulators would choose one. That doesn't sound like the regulators I know. And I struggle more with if FSD is something that is on people's radars. And look, think about Waymo, which is just good right now in San Francisco, LA, and I guess in Phoenix. You can't just assume the regulators are going to say, okay, we're going to pick one, and that's going to be the only product. That doesn't sound like regulators I know. They like to have competition, and
Sure. Fair
so I
point.
don't believe that they'll just say we have to have FSD, because that's just not the way regulators normally behave.
Very fair point. My point isn't specific to FSD. It's that I pinned a post where my mother actually liked FSD, which is just the feel of a robotaxi, and the thinking being, and the most important part of the post being that my dad's best friend lost his child to a drunk driving thing, and if you had seat belts that initially were pushed back against, and now you have this technology that can save people's lives. What happens when the regulators require a software or a technology to save people? Who's going to be there? In my opinion, as we could see, it's a technology that is not specific to like Mercedes, that's required to only 40 miles an hour or XYZ. You know where I'm going with that. So I'll keep it brief and put it back to you. What happens when they require that that everyone install, whether it be legacy, ICE, or electrical vehicle?
Well, and they probably will, using seatbelts as an example. But just remember, FSD is not 100% intervention free. It's 95, 96, I don't know. If you drive 100 trips, how many trips do you have to intervene? Again, my stupid little 2-hour ride in Chicago, Brad intervened, 4 or 5 times, and maybe we did, I don't know, 20 trips, if you think about it that way. So it's not fail safe yet. It's not perfect yet. And so I agree with you. At some point, the regulators are going to require it, but I don't think we're there yet until it's pretty close to being perfect. And second, I don't know if you listened to the NVIDIA called keynote by Jensen Huang last night, but they're not playing favorites. They're giving their AI chip, to pretty much everybody. And they talked about autonomous driving. They talked about robots, and it was very clear that Tesla is not their favorite customer. They are going to make it available to anybody who wants to pay I guess, $40,000 for these chips. So to just assume that Tesla's going to be the only one, this has always been my premise, as you know. And so you go back 4 or 5 years, and Elon's been talking about, okay, it's going to work next year. It's going to work next year. Well, forget about that. But is Tesla going to be the only one that masters AI and is able to come up with a product that can drive itself? I don't believe that. I think other people are working on it, and I think, NVIDIA offering their chip to every single person who wants to pay 40 grand. I think, yeah, you have to have the compute, and you have to have, lots of data, and so not everybody can do that. But I think there's going to be 3 or 4 people who can do it. And again, Jensen specifically called out Mercedes yesterday as a partner they're working with on autonomous driving. So I agree with your point. At some point, the regulators are going to require it, but I just don't think until it's 99.9% perfect, I don't think that's going to happen. So I think most of the competitors still have another couple of years to try to catch up with Tesla.
Thank you for your response.
Omar, did you want to respond?
Well, first of all, I think Gary rode around in 12.2. So 12.2 for me was a pretty horrible build. I thought it was even worse than 12.1. It was just driving really slow. 12.3 is much better. And then now there's a 12.4 coming. So I wouldn't underestimate the rate of progress. And, NVIDIA, obviously, they've always sold their chips to anybody who wants them. Tesla's definitely not their favorite customer. They used to use NVIDIA for the car computers, and they stopped using it and made their own chips. They're using NVIDIA for training, but now they're ramping up Dojo. They're building a Dojo data center. They're ultimately probably going to be trying to compete with NVIDIA on that front. So, Tesla's not their favorite customer, but who else has 6 million cars that can update their software? I mean, you're seeing the reactions on here on X. Right now, FSD beta 12.3 is rolling out to everybody's cars. It's the biggest rollout yet. I mean, people are excited. They're losing their sleep in some cases, from what they tell me. They're installing it and they're reporting pretty positive results across the country. I think people are pretty blown away. And who else is doing that? Nobody. So, you can say there will be competitors, of course, in anything that's valuable. There's going to be competition. But Tesla has been working for years, updating these cars, gathering data from the fleet, doing things that others can do, yes. The playbook's very much out in the open, but it takes a lot of time and a lot of capital to do. And I think there's network effects as they just sort of continue to put out models, get feedback from users. There's sort of a flywheel there. As people use it more, it gets better faster. So I think really when you look at humanoid robotics and autonomous cars, which a lot of people are starting to take much more seriously, you look at everything else that's happening in AI, you look at NVIDIA's keynote, for example, there does seem to be a sort of magic moment happening in autonomy and robotics. And I think Tesla's very overlooked in terms of their dominance. If you look at something like a Waymo and a Tesla, you can't really tell the difference. They look on the surface level kind of the same. They're both driving the car. But if you look at it from a technical level, Tesla's technology can do things that nobody else can. And if regulators were to mandate that this technology be included in every car, as they've started to do in Europe, there's nobody else out there who can offer a solution for the cost and scale that Tesla has. So there's good reason to think that they could take a sizable chunk, if not the majority of this market, just based on where they are, the size of their fleet, their data advantage, the team they have, the amount of compute they have, and just the flywheel of customers already using the product, demanding it get better, complaining on Twitter, sharing their improvements, uploading those drives on YouTube. It's been very difficult for Tesla, and it's not going to be very easy for others to catch up to either.
Yeah, and I can want to add a couple of comments here. NVIDIA, and I'm a big fan of the company. I follow it. I've been following and investing for years and so forth. They've had a chip. They've had an inference chip for years. They've had training compute for years. And if you look at how it's structured, they're working with, I think that at one point they said 80 different automobile companies. I don't know if there's even 80, but it was just a large number of companies. And what do all those companies have? Some of them have LiDAR, some of them have ultrasonic sensors, some of them have, this, that, like they're all over the place. Some of those vehicles have $5,000 to $10,000 of sensors on them and compute inside. And all those companies have to pay NVIDIA 60 to 80% margins just for that inference chip, not to mention the training side of it. So this recipe has been out there, but there's no car that I can get into with an NVIDIA solution that's going to drive me around and do turn by turn on streets with the same level of accuracy and progress and improvements we're seeing going on the V12, down to V12.3, and kind of it looks like we're on this accelerated pace now where the amount of improvement between builds and the ability to add these features, it seems like we're going to be on more of an accelerated path now that we're off of the V1 to V11 series. So anyway, I think the point is like there's silicon out there. Like there's silicon you can buy from multiple companies, and there's the client side and there's the network infrastructure side. But the fact that this whole thing exists under the roof of under one roof of Tesla, like it's fully vertically integrated. Yes, they're buying training compute from NVIDIA, but with this whole thing, including the trainings happening kind of under Tesla's purview, I think they're going to get, to answer your question, Gary, in my opinion, they're going to get to the finish line first, and they're probably going to have an advantage. Is it a year? Is it 2 years? Is it 4 years? It's hard to say, but I think they're going to get to the finish line first, and I think others will eventually get to a finish line at some point. But I think the others, like what else is, I don't see another highly focused effort out there yet, and maybe that'll change over the next year or two. But if just the whole setup, the way it works, of like you have a silicon provider, you have a software provider for that silicon, you have a network infrastructure provider, and then you have these OEMs that have all these different setups and configurations. Like the management of priorities and the management of like, how is this work going to get done and how are we going to get to a singular goal? I think that's going to be difficult. Not impossible, but I think it's going to take more time to get to the finish line. But I do, the longer this takes for Tesla, I think that the risk for Tesla is the longer this takes before like the veil is off, and this V12 or V13 is a quote unquote like a production release. Everybody gets it. And it's just like part of like it's not this experimental thing anymore. It's like it's there and everybody gets it and it just works every time. The longer that takes, I think the gap can close. So I think it's really incumbent upon Tesla to accelerate to the finish line. And then the second thing is on this take rate. I find the take rate discussion fascinating. And I like the fact that you have the $1.90 on it and you have an assumption of like the 12.5%. Right now, I mean, the only region that has FSD beta is North America. In fact, the only country that has it on subscription is the US. So, and I think the only data point we have is a 23% take rate. The 400,000 vehicles, 1.7 million of them on the road. Now, those numbers have all changed over the last year, but I think that's the only reported data point. Maybe Tesla recently updated that, but that the only place where we sell FSD beta in its full form under subscription is in the US, and then I think it's eventually the subscription's coming to Canada soon. So if we do, so I think the $1.90 was on a 12.5% take rate. So if it's more than double that already, I don't know. It just it's food for thought in terms of the assumptions. And if we double from here, and then I think it's a more meaningful conversation.
Let me just again respond to that. So I'm being very generous. I'm assuming 37 million Teslas sold times 12.5%. So if you want to use a higher percentage, you got to use fewer Teslas sold, right? So I'm going out to 2030 and I'm assuming everything sold globally, US, Europe, and Asia, 37 million between 2018 and 2030. So if you just want to use US numbers, fine. Don't use 37 million, use half of that. That's number one. Number two, to Omo's point, look, it's a great product, and there's no question that they're further ahead than everybody. And I believe that. I believe that Tesla's ahead of everybody else. The challenge I have is why won't they assume the liability for any injury or damage? Because that's really what's going to get regulators to give Tesla preference over everybody else. That's why, Waymo was approved, because to be a level 4 type system, you have to assume the liability, rather than what Tesla does is say, no, the driver still has the liability. So I guess, if I were Tesla and I was trying to put my competitors out of business on this, I would say, look, I'm willing to take the liability if something happens. But I have not, and I was just with management 2 weeks ago in Austin, and I asked this question, and I don't get any sense that they're willing to assume the liability yet, which from a marketing standpoint then doesn't really give it, a leg up versus everything else if they're not willing to take the liability if there's an issue. So that's a question I would throw back to those who think, the regulator is going to approve Tesla early. When is Tesla going to assume the liability for injury or damage if something screws up, as opposed to today, it's the driver's fault if something happens.
Yeah, I'll just make one comment. I'll throw it over. I think you have to use the 37 million as a denominator. The reason I brought up the US numbers is the US is the only place that has FSD beta on subscription. So you can't use the Europe or China numbers because they don't have the product. They don't have it.
Yeah, but there's not going to be the same take rate in Europe or Asia, even if they had the product.
Why?
Because in the US, everybody knows about it. It's commonly communicated to folks that you can get this. I don't believe in Europe you're going to see, 23% of people in Europe or Asia take the product. It's just there's no awareness of it.
I'll tell you, I'm buying my 10th Tesla. I've never been educated on FSD beta by anybody. Anytime I bought a Tesla, I've never had any information given to me about it in the U.S. So I don't know.
US, Jeff. You live in the U.S. You're a Tesla aficionado. You go on Twitter and look at Tesla. You know a lot about it. I'm just saying the average person in Europe doesn't know anything about FSD or China.
I'm just saying no one's told me anything about it at all. Is the point? I don't think Europe is going to be at a disadvantage or Asia. But it's a debate. It's up for debate. I'm just trying to be clear on the only place where you can effectively test and measure a take rate is where the service has actually been offered under subscription, and that's the U.S. If we want to assume that it's going to be less in China or less in the rest of the world, I think there should be valid reasons why that would be the case. I don't know why they would do different awareness campaign in Europe or Asia versus the U.S. But I got it. Omar and then Xander.
Yeah, I just think that expectations are way too low. And, I like Gary. I actually think that the way he does his math conservatively, I actually agree with. I wouldn't do it any differently myself. But you got him saying here, well, it's not going to be more than 20-30%. When we're talking about a feature that drives your car for you, I mean, this thing has literally changed my life. Even today, you get in, you tell it where you want it to go, and it can just take you there and park. And then you're just there. This was science fiction. You can buy a car that can run this now for $35,000 with the point of sale credit. That's crazy. How long until anybody else, puts a car on the market for $35,000 that can just drive itself anywhere you ask it to? So, in terms of the liability question, I think that they are going to take liability for it, but once it's good enough to do that. The last thing you want to do right now is tell people, hey, you're off the hook for anything that happens. And they're going to say, okay, great. Let me go on my phone, do whatever. You want people to actually watch and monitor it. The way they're doing this with end-to-end deep learning is very different than anything anyone's ever tried before. Very different than Waymo, which has HD maps. They scan the whole city. They know exactly where to go. They have a lot more sensor modalities. This technique of driving with just cameras using end-to-end deep learning is something that can work, but it requires a lot of long tail examples of weird things that could happen to achieve that level of reliability that they can be confident taking liability. And so there's no other way to really get it to work except to sort of seed it out in these sort of intermediate stages where it's pretty good, but not yet good enough to take liability. So I think when the time is right, they will take liability for it, but we're still not there yet. But in the meantime, it can already drive the car under your supervision, which is, I think, a lot better than nothing. I mean, I have a Cybertruck now and it doesn't have any autopilot or FSD. And I can tell you how much it just feels like going back in time. You have to just hold the wheel with your arms the whole time. It feels archaic once you're used to FSD beta. I mean, this is a product that even today, even if it never got better, I think is just fundamentally addictive and locks people into the Tesla ecosystem, where no other car that doesn't have this technology really becomes a viable option for them to drive. And I expect that we'd, assuming the quality of the software matches in the European and Asian markets, assuming the value proposition would be just as strong in those markets as well.
One other thing that would help, I think, from an investor standpoint, because that's what we're talking about. Why does the market not value FSD other than they're not putting much of a take rate on it? I think what would help is if Tesla would break out AI as a separate segment. So they've got auto, they have energy, they have services. If they were to take the FSD piece today, the 400,000 times $199, let's assume everybody's on $199 a month times 12 months, and put it into a separate segment that's $1 billion. Now, I asked that question, I was out there, and the IR people said it's not significant enough yet. Relative to a $100 billion annual revenue, it's only $1 billion. But I think if you really want to invest, you said investors don't pay any attention to it. That's because Tesla doesn't break it out for folks. And look, it's not that analysts are lazy, but if you want to track something every quarter and see how they're doing, you got to separate it out and say, just like energy, you have to say, here's what they're producing, this is what the revenue is, this is what the profits are, and then you could put a value on it. Right now, there's no way to put a value on Tesla's AI piece, but that would be something I would encourage them to do if we really want to get, and I'm not saying, play games with the stock, but to really get people to focus on the AI capabilities of Tesla is to you show it as a separate segment, as a fourth segment.
Yeah, I completely agree, Gary. And you just need to tell Wall Street a story that's something other than slowing growth in the auto business, earnings contracting. If you can even just show a sliver of growth in AI or something, then maybe you give people a story to get excited about. But I have to imagine the only reason I can think of for not breaking it out is that the numbers aren't good. When the numbers are good, you love to brag about them, but they quoted 400,000 users on a recent call, and you go back several quarters and they quoted 400,000 again. So are we seeing churn from subscriptions? Whatever it is, we're not seeing that growth. So the question really becomes, what do you need to do to actually drive growth to levels where there is a story here? One thing could be, okay, obviously the quality of the software improving, that might have some impact. You might have to play with pricing. There aren't a lot of, fixed costs involved in activating this on a car. So there's certainly some things you could do with pricing there. Maybe sending people a free trial, something like that. Going to on-demand pricing where it's just installed in every car, but maybe you charge their card, per ride or something like that if they don't have a subscription. There's maybe some things you could do there to really drive adoption to the levels you want. But they have a lot of flexibility. I think they have a lot of tools in their chest that they could use if they felt that the software was ready and they wanted to push it.
Yeah,
Yeah.
I'll shut up and let me just say this. I was very impressed by the product. It's unlike, you made fun of whatever it was, 12.2, whatever Brad had, but it was very smooth. It was not jerky. 95% of the time it works flawlessly. But, I just wonder, how do you get to that 99.9% that you need for people to say, we can have liability and we can take the liability and we can even envision some sort of robo-taxi network at some point, because I don't think we're there yet, but it's a far superior product than when you and I drove around, for instance,
So,
over out
yeah, Gary,
Cisco.
I think this is where the debate is, and this is where the discussion should be, right? What is the value of FSD? And what you've said several times now is that only when it gets to, Tesla takes on liability when you're really close to true robotaxi regulation and that business is launched. But prior to that, when first of all, everything we've been talking about is prior to 12.3, which was just launched 3 months ago. And you've been hearing and seeing the incredible improvement. You've heard Elon say that every 2 weeks we're going to even have more improvements. So what happens when the car, let's say a year from now, the FSD 12.4, 12.5, 13, and others continue to roll out, not robotaxi, but incredibly safe, incredibly, enjoyable to drive, allowing somebody to drive their car. They're still driving, but they don't need to pay full attention, even though they still have liability. And I think what I've heard you say earlier is that, yeah, it's going to increase take rates, but it's minimal. You don't see it increasing the safety of the car and so forth. And I agree that I think Tesla purposely is not yet, really pushing hard. And they keep the price high at $200 a month. It's not ready. And they purposely do that. Once they get this to this level, they will then lower that price, try to increase take rate, because it's something that they know that the vast majority of people will love. But so are you saying that there's no value or very little incremental
No.
value
What
if
I'm
it's
saying
not
is
robotaxi?
there is value, and unlike what many people on Twitter say, the analysts all include FSD in their models. They do. I mean, I look at their models, and they do what I do. They take a cumulative number of vehicles sold. They multiply it times about 10 to 15% take rate. They multiply it times $199 a month times 12 months. They put a 90% incremental margin on it. 1 minus the tax rate divided by number of shares. That's what they do. Now, if Omar's right that because this product's going to keep getting better and better, and the take rate, let's say it goes to 30%, okay, then you'll double that number and the stock price will go up. Okay, so there's no question in my mind that's going to happen. But what I can't tell you is by that time, our competitor is going to be able to do the same thing. Will there be competing products out there that, that will cause the price to go down because they're charging, make it up, $60 a month instead of $199 a month? I don't know that. And so the reason portfolio managers don't they put value on it, but they're putting a take rate value on it as opposed to where the real money is in the stock would be if there was a robo-taxi product. And at some point, you tip over and people start saying, wow, this is so good. Not only should the take rate be much higher as an ADAS tool, but you could have a robo-taxi network, and that's where the stock would really take off. And I do think at some point that'll happen. I just don't, I'm too prudent the way I manage money that I'm not going to count my chickens before they're hatched, because I just can't see, I can't, maybe I'm just not, I don't have the vision, or maybe I'm too old, who knows. I just can't see that they're going to get there before everybody else. I think they're in the lead right now, but you still have regulators that have to approve this thing. And, if you're not going to assume the liability the way Waymo has, I'm not sure how you ever get that robo-taxi valuation. You could definitely get a higher take rate in, but that means that Tesla's got to hire a bunch of marketers to demonstrate to people why this product is so superior to everything else out there. And so far, that's not the way Tesla operates. They don't even really advertise, although they're starting to advertise. So I agree with Omar. It's a superior product to anything else out there, and it should be a higher take rate, but I don't believe the take rate is, I don't believe it's going to be 30 or 40%. Maybe it'll be 20, It'll be 25, but at $199 a month, that's about a quarter of a Model 3 car payment. That's a lot of money.
Model
Yeah.
3 lease is $329 and it's $199.
More to my point, that it's a big chunk of the dollars. It's a high percentage relative to your lease price or to your monthly.
I think all these variables correlate back to the quality of the software in the system right now. So they keep the price at a certain level. Tesla has all the internal metrics. They know how many people have downloaded FSD beta subscription. They know how many people have bought it up front. They know how many people download it or download the subscription for 1 month and cancel it the next month. They have all these different bounce rate metrics, and they could probably they can look at that data as well, build by build, and understand and probably see internally as the quality of the build improves. They can see what's happening with take rate, and then take rate's a function of pricing, both of the total vehicle itself and then of the service itself. So all these things are variables that they can basically flip on or off and change on the back end. They've basically got the system set up in place. So I'm assuming they're going to be more transparent with the data as the data gets to a point where it's super good and like, much better than a human. I think you'll see them share more of that data, and I think you'll see them be more outward with it. And I think you'll see them, then they'll have I think they're keeping the price high it's kind of counterintuitive of, I'm not going to lower the price and drive mass adoption of something that I don't think is like 100% like ready to go. So keep the price high is somewhat of a barrier. I don't think there's anything magical about the 199. I think they'll have flexibility with that. I think they'll have flexibility with the all-in price as well. And I think they'll, in the future, I'm assuming they'll have ways to bundle it with their insurance offering and get to the point where you actually start changing the game of this is a better vehicle. It's more impervious to its own, libelous collisions, and therefore it's going to be less of these collisions, and the insurance premiums can be lower, and we can bundle these things together. I think these things will start working together. But right now, as it today, as March, 18th or 19th, that they got a set of data that says, well, we can't do all those things yet. The quality of the build has to improve. And I think what they're telling us is that now that they're on this end to end, and now that they've got this first stable build out that's surpassed the performance of everything they've built up to this point, and now that they've got compute coming online and so forth, that the improvements are going to be greater, the leaps are going to be greater, and that they're building more confidence in. And I think they'll be able to start triggering some of these different things, whether it's changes in pricing, ways to educate consumers more about the availability of it, and then of course going wider than the US. I think all these things come. I think the whole controlling point of this is the actual quality and performance of the build. And then once that improves and gets to a certain threshold, global expansion and pricing flexibility and all these things will come together. And I think you're going to start seeing a big portion of the actual revenue for Tesla. I think you're going to really start seeing it change over to the SaaS side of the business. But it all has to point back to the quality and performance of the product first.
I just want to add that, like I really love and respect Gary's spreadsheet approach to analyzing this, but ultimately, you have to look at, is the technology advancing and is it improving? Are they going to be able to deliver on their promise of full self-driving, as the brand implies? And they are doing that. And 12.3 is the first time where I can see robotaxi be a reality, and because it's performed that way from door to door without any intervention, and it's smooth and it's comfortable, and there were no need for me to be involved. So I'm happy to sit there as long as it takes. And I thought Jeff's points and Omar's points regarding the insurance, and I think that like we have to be patient with this evolving technology, and eventually, whatever they decide to charge for it will uh, be whatever they decide to charge for it.
Is Gary the only person on this panel right now that believes that this is something that I think I heard you say, Gary, that Tesla might have a 1 or 2 year head start, but eventually this has become a commodity?
Yeah, the only reason I say is every innovation we've seen in the auto industry, whether it be power brakes, seat belts, somebody mentioned before, automatic transmission, there's always been a leader who was the innovator, but within a year or two, every single innovation has been copyable. And then maybe this will be different because it involves software, and there's a level of compute needed that only Tesla has today. But I guess I'm just looking at the history of the automobile industry, that there's always been innovation. And within a year or two, every single one of these innovations has been copied by everybody. And again, this may be different, but it's hard for me to say this time is different because, again, as a student of history, very rarely can you say this time is different. So that's my
Okay.
challenge.
Okay, I had thought that it's because you had already studied all the other, robotaxi companies out there and felt that they were on their way as well. Sounds like it's more of just a modus.
But you see a lot of companies investing in it, whether it be Baidu, Mercedes. I mean, a lot of firms are investing in this.
And
So
to
it's
Gary, real quick for a point of order, Elon, if you remember in Omar's video, he was there. I think Elon said that FSD or full self-driving would become commoditized after, like, say Tesla solved it. In a year or two, everyone would have it in one way or another. I think Elon, in that interview with Omar, he can maybe comment on it, said it would become a commodity over time.
Yeah, he said in 10 years it'll be easy. But in the interim, there'll be huge differences between what various cars can do. And I think there's sort of a flywheel where you have this massive amount of data that creates the best system. Because it's the best system, more people want to use it. Because they're using it, you're then generating more data. And people, I think, are going to have a strong preference for the safest system, the most proven system, the one that's driven the most miles without issues. And I think they're going to be maybe more skittish about getting into the number 2 or the number 3. So I see there maybe being, 2 or 3 major players in the world in 10 years. But, how the sort of market structure is going to evolve, it's kind of unclear. I think Gary is right, though, that eventually every technology is commoditized. And 10 years from now, in 2034, there's no doubt self-driving will seem easy. It'll seem trivial. There'll be a number of suppliers on the market that can provide you that technology to make your vehicle drive itself. But the question really is, who is going to be equipped to actually operate this business at scale around the world, having, driverless vehicles, performing jobs for people? And you look at Tesla, you look at their manufacturing, you look at their charging network, you look at their vertical integration, their service network, their mobile service network. They're very well positioned to do it, I think, more than any other company.
They are, and look, I think they have the best product, and they do have a head start. Again, as a stock picker, I can only put a couple years of valuation in for it because I do think other people catch up. And the other, again, I don't want to call it dirty little secret, but the other rub I have on Tesla is they don't really have great communication skills. They very much say product stands by itself, product sells itself, word of mouth. They don't have great communication skills the way Apple did with iPhone, where even if they have the best product, there's got to be a way to get that out there. They can't just rely on the product sells itself and word of mouth. And I haven't seen Tesla been able to do that so far, where they can communicate that they have the best product. To me, with what you said before about autopilot and even FSD, you could really communicate that they have the best product out there and establish this first mover advantage. But they don't know how to do that, and that's a challenge for Tesla because they don't really communicate this type of stuff.
Okay, let's have Tesla Yoda up.
Thanks. Gary, it's a privilege to ask you a question here just about the institutional side. Just wondering if the institutional investors are convicted or has strong conviction that the future of driving is autonomous versus sort of human behind the wheel. And then secondly, do they have the conviction that if the future of driving is autonomous, that the technology, the core technology that take us there is AI?
Yes and yes. Most institutions believe that within, we'll call it 5 to 10 years, cars will drive themselves. They definitely believe that because you can see it today. And then
Right.
the question is, who can do that best and who can communicate it best? You know, we've seen over and over with innovation, the first mover doesn't always get the lion's share of the market if they can't communicate. And so I believe Tesla will be first. I believe others will catch up, but then you're going to need really good branding, really good marketing to say Tesla is the best at doing this. And that's the challenge for Tesla because they don't have that skill set in house. When I look at, remember they had last year AI Day or Investor Day, they had all those people up on the stage. There are very few people there that were marketing people. They're mostly engineers, manufacturing experts, and they really need to figure out a way how to communicate to the masses that they can, whether it be an ADAS system or a robotaxi system, they're better at it than everybody else. And that's the challenge I have. But no, to answer your question, institutions definitely believe that autonomy is the future of the industry, and it's 5 to 10 years. It's not 10 to 20 years.
Right. And Gary, have you personally, because I think one of the things that Omar and some of the owners of the vehicles have gone through is the progression through the different iterations of FSD from 11 to say 12.3 now. Just wondering if you've had a chance to experience that that iterative change, or have you experienced 12.3?
Yeah, I have. I haven't been in 12.3. I was in 12.2, I guess it is, or whatever was before 12. I think it was 12. I don't think it. I don't remember 12.1 or 12.2. But yeah, look, 12.3 looks like it's the real deal. And look, the challenge for an institutional investor is we've heard Elon say for 5 years, by the end of the year, the Tesla will drive itself. And so there's a healthy degree of skepticism. But look, institutions are very quick learners, and when they see that something actually works, including myself, and it's far superior to everything else out there, then they'll believe and they'll put a value on it. But right now they're still, I guess they're skeptical because for 5 years Elon has said the product will be ready by the end of the year, and it just hasn't happened. And this time it may be ready by the end of the year, and that's the opportunity as a stock picker that if Omar's right that this product is so superior to everything else, and Jeff said the same thing, and the take rate is really, well, let's call it 30% instead of 12.5%, there's at least $1 or so of earnings opportunity, at a 50 or 60 multiple. That's $60 on the stock. So, if it's true that they really do have a first mover advantage and the product is so superior to everything else out there, there's a huge opportunity to buy the stock pretty cheap right now.
So,
Thanks,
so
Gary.
quick question. Yes, just let me jump in real quick. I haven't said much. Gary, since I don't really care what institutions think, to be honest, but I care what you have to say, and I think it's valuable to know what they think. So I think the important question right now for Tesla stock is, so we see Tesla going through this year. It looks like Q1 deliveries is going to be, possibly really low, maybe 415,000, negative year over year quarters. And, possibly, I don't know what it'll look like. But what I'm trying to get at, we're talking about FSD and the progress, which is great. How do you, or how do institutions that you talk to in general, weigh the core business of Tesla decelerating in growth in units, decelerating the earnings? Will that trump, will the FSD progression and the great drives on videos, is that going to trump the numbers this year if they don't come in great? I'm not thinking so, but I would love to get your approach on that. How much cadence or how much value do you assign the FSD artificial intelligence progression against the auto business? Is it 80-20, 90-10, 100-0? Because I think in the short to medium term, that's what we're really talking about. And I've been talking about this for months. Can the core business hold up enough to let these other things play through to support the valuation of Tesla stock? I think that is the biggest story right now.
Yeah. So as an investor, everybody starts with what is the stock worth? Okay. So, and people have different ways of doing it. I try to go out to 2030. I come up with, what is the EV adoption? What's the SAR? What's the EV adoption? How much volume does Tesla get? Put an average selling price on it, put a margin on it, value, put earnings on the energy business and the services and come up with an overall earnings for 2030. Put a value on that in 2030, discount it back to the president, and I think the stock is worth about $250. So every portfolio manager starts with that kind of basic principle. And if you're a growth manager, though, you're smart enough to know that the quarters matter and guidance matters. And Tesla doesn't really guide, so you don't really have to worry about guidance. But to your point, when you get to the end of the first quarter, the street right now, which, I'm going to discount the street because a lot of people are looking past the street saying the street's just stupid. But the street right now, if I call up Bloomberg and say, okay, what's the first quarter delivery consensus? Right now, it's probably about 465. And, for those of us that do try to track by region, China, Europe, and US, or listen to somebody like Troy who does that, the number's probably in the 420 to 425 range. So they're going to miss from a volume standpoint. I think that's already discounted in the stock, though. I believe that that's why the stock is down 30% this year, because the market, says, okay, they're probably going to miss numbers for first quarter, and that's going to cause people to take down numbers for second quarter, third quarter, and fourth quarter. So now a lot of people are looking at what is the year going to be. And again, if you look at consensus for the year, it's like 2070. I'm at 2 million. I know Troy's at like 1920. Okay. So, and that equates, when you take deliveries down, you got to take your earnings numbers down. So the street right now is at about $3 for this year. I'm at 270. And I know that, there's some people like Adam Jonas that are close to 2. So the question is, you have a value in your head of what you think the stock's worth. But as a growth manager, which is very different from being a value manager, where you don't care so much about this, you do worry that if a company misses with a 60 multiple on it, it's going to cause the stock to get crushed. And so, to your question, I think if on April 2nd, if consensus is, let's say, because we'll see what the IR spreadsheet shows, if consensus is really 425 and they come in at 425, then you're probably fine. But if consensus is 450 and they come in at 425, stock's going down, and it could go down 10 or 20% because people are going to take the out quarters out. When you get to second quarter, consensus is like 510. And China, if you've been following the China numbers, they were very weak last night. They're a good, I think last quarter they were about 138,000 for the quarter, and they're going to be lucky to do 130. So China's light, Europe's light because the Germany and France tariffs came off. U.S. is light mostly because Model 3, has not been able to, Troy calls it a screw up, but they really haven't been able to get the changeover mastered as quick as they thought. So they're about 30,000 units light just from all day. That'll take care of itself. That's a one-time issue. So bottom line is, I actually think we're getting close to being discounting the first quarter miss. And so then you're back to valuation is worth 250. And then, FSD is the wild card. If you can get a 30 to 40% take rate on FSD, the stock could be 250 again tomorrow. It really could. But I don't think portfolio managers believe that. And it's going to take time. It's going to take time to show it because, as you know, Tesla doesn't disclose that.
Okay, so Xander, we'll get to you, but I want to get Omar to respond to that because that's exactly the topic right now, right? We're seeing FSD version 12.3 blow everybody away, seeing that it's now addressing a lot of edge cases. Now we're hearing that there's going to be additional updates every 2 weeks. And this is what we were expecting, since this is a neural net end-to-end network, that if it truly is so much better, it's about the rate of progress. So, Omar, what is your expectation? What do you think is going to happen the rest of the year for the progress of FSD?
Well, I think it's going to be able to do exactly what they've been planning to do. I think it's going to become feature complete within the next few months. So that means I can conceivably walk out of my house, push a button, car pulls out of the garage, it reverses, I get into the car, I say, take me to dinner. It goes, it drives on city streets, it drives on the highway, it gets off the highway, drives on the city street, goes to the restaurant, parks. I get out, I eat dinner, I get back in the car and push the button again. Car pulls out of its parking spot, picks me up. I say, take me home. It drives me back home. And more often than not, it does that with zero interventions. So we should see a much faster pace of improvement. At what point that sort of tapers off, whether it gets us to autonomy, I don't know. But I think you're going to start to see the software become feature complete in the next couple months. And then after that, they're just continuing to grind on the reliability. And I think the increased number of users from this new functionality will help with that a lot. So within the next 60 days, if not sooner, I'm expecting them to cross 1 billion miles. So that's going to be a milestone after more than 3 years to have over 1 billion miles of driving on the new FSD beta stack. And yeah,
Can I
so
ask you, Omar? So
mhm.
what do you think the intervention rate is today? On FSD 12.3. I mean, frame it as like 99%, 98%, 99.9. What do you think the number is today? You mentioned no interventions. It's not none, but what do you think is the real intervention rate or non-intervention rate today?
Well, it's hard for me to really say for sure. I'm obviously in San Francisco, where a lot of the FSD team lives. I think you'd probably have to do a pretty broad-based survey. It would probably look very different for urban environments versus suburban versus rural, and areas where there's a lot of Teslas versus areas where there's not. But what I can tell you is this is the first version where more than 50% of the drives are just perfect. No intervention, no adjusting the scroll wheel for speed, no accelerator press, no intervention of any kind. Now, at the same time, there's still other drives where I do have to take over for something, including things that are potentially serious. But I see it evolving rapidly. So, I mean, I'd say I get a takeover maybe every 50 miles or so, maybe.
So there's no way to put that into a percentage, right? I mean,
Well, I mean, Tesla has all the data on this. And I think if it looked really great, then they would share it with us. They have a board, apparently, according to Isaacson's book, in their sort of engineering center in Palo Alto that has the number of miles per intervention. And they watch how it's trending up or down in real time. They haven't disclosed a lot of that data, but just sort of anecdotally as a user, I can tell you that I'm intervening less and less over time.
thank you.
You said about once every 50
Gary, I have
miles,
a
Omar.
question for you.
What is? Oh, go ahead, Zane.
Is there a point where Wall Street, you mentioned growth management. Is there a point where Wall Street looks at Tesla as not a car company, but an actual, technology where it's beyond the car business, where it gets credit?
It would help if they broke
Go
it
ahead.
out. This is easy, and I asked the IR people this when I was out there. Why don't you just break out AI? You've already got FSD, which is about $1 billion of revenue. Just break it out, and as Dojo gets added, as FSD licensing gets added, as Robotech, you build off that, and that's how you get Wall Street to actually look at it as being different than a car company. But today, 95% of the profits are coming from the auto business. It's going to look at it as a car company. And look, there's easy solutions to this, but for whatever reason, Tesla said it's not significant. That was the answer they gave. It's not significant enough to break it out. But once they do break it out, Wall Street will start looking at it differently. But they don't break. Look, Wall Street, they don't want to make up numbers, right? You need to be able to track something. So when I build a model, I don't put in a whole bunch of things that I can't track. I put in stuff that I know they're going to give me either once a year or once a quarter. And if they gave me every quarter, here's what we'll call it AI segment revenues are, here's the AI segment profits, and some unit metrics, like maybe number of FSD, subscriptions, something like that, then I would track it, and then I would start thinking about it differently. But until Tesla starts doing that, people are going to think of it as a car company, unfortunately.
Yep. And just to that point, but Xander, you keep saying, when are they going to get credit for not being they are getting credit for not being a car company. Car companies don't trade at 70, 80 times forward earnings. There is some of this AI. When Tesla stock went to 1.2 trillion, there was some of that was the car is going to drive itself. There's going to be a robo-taxi network. Those things have slowly, come off the fire burner, and they're maybe still happen, but people have more doubts. So you keep saying they should get credit. Even now with the earnings coming down, let's say they do $3. The stock was, 250, 300 not too long ago. 3 times 90 is 270. It'd be trading near 100 times forward earnings. So the fact that, I don't know how much more credit you want Tesla to get, they do get a lot of credit for not being a car company. It's just in your mind, you don't think they get credit. I think they're getting tons of credit for being more than a car company, and the valuation shows it.
But I would say this, back to Xander's credit, and not to argue with you about this. I think most portfolio managers look at the growth rate. They don't look at it as car company versus tech company. They just say, as long as it's going to grow it, let make up a number, 20%. 20% equates to a 40 multiple. If it grows at 50%, that equates to an 80 multiple. And so the reason car companies don't get, 25 multiples because they don't grow. And Tesla, and here's the problem with Tesla, the growth rate is slowing. You're going to see for the first quarter in its history, other than COVID, auto revenue growth will actually be down year over year in this quarter. And so when you're putting a multiple on a stock, you look at unit growth, you look at revenue growth, you look at earnings growth, and you go forward. You don't look backward. And if people believe that their earnings growth is only going to be 15 to 20, there's no way people are going to put a 50 or 60 multiple on the stock. So you need to have something like, FSD take rates go up dramatically, or a robo-taxi, get added to it for people to put that higher multiple on Tesla, because as revenue growth slows, the multiple is going to come down. Not because it's an auto company or a tech company, it's because growth is slowing. It's clearly slowing.
And that was my whole point, though, Gary. Like right now, if you give Tesla three times, 60s 180, you have a 60 forward multiple. Units might be flat this year, and year over year earnings is going down. That's to my whole point. It's still getting a massive multiple for no growth. You see that, right?
Yeah, although volume growth will not be flat year over year, because the Model 3 changeover in Fremont, that's fixed. It's probably already fixed. So I'm looking at volume being 2 million this year versus 1.8 last year. That's 12% volume growth. And I'm looking at earnings, earnings is not, because you've got year over year price declines. But as I get into next year, and I usually try to go out 5 years, I actually think you could see 20% earnings growth, and over the next 5 years, you get about 10% volume growth. But you're right. What do you pay for a 20% grower? You don't pay 60 times for that. That's the problem.
Yeah, I think that brings us to where we are today. I think this is going to be one of the most difficult times, back to the title of the space, of how to this is the most difficult time to figure out what do you do, with the stock from an investment or a trading perspective. It's going to be, because we're at this point right now of where the hardware business is at, where it's at from a profitability perspective, where it's at from a growth perspective. We were just discussing, and we've never been so close to one of these bets starting to come through and maybe, see a green shoot. Maybe it's FSD expansion. Maybe it's FSD take rate, FSD expansion. Maybe it's a licensing agreement. Any one of these things are now closer to happening than they've ever had before. It's not really hopium. It's actual fact, based on the juncture and kind of where we're at. I think this is where it becomes and now you've got a Cybertruck where, if they do get to a couple hundred a day, now you're at a 70, 80K a year run rate. If they get to 300 a day, 350, you're at about 100 per year annualized run rate, and you've got a product where the CEO is just interviewed and said that there's over 1 million orders for. There's no product in any industry, microelectronics, automobile, anything like it, that has that kind of demand behind it, and it looks like people are buying the product and they love it. So I think we're just at one of these weird points where, yeah, it's going to be it may be under pressure for some period of time. This isn't trading advice or whatever, but it's also, for me, like, just in my personal experience, like, it's one of the more difficult times to say, oh, I think it's going to do this, or I think it's going to do that, because if any one of these things comes through, it's, it could, have a pretty big impact on how the business is valued.
Go ahead, Senator.
Yeah, not trading advice, but this is, in my opinion, this is the moment where you have to look at, like, realize that the thing that they've been working towards is finally within grasp. And if all the videos that you see and all of the experiences that you hear from people that you trust are actually delivering on this ability to drive from driveway to driveway without human intervention, you do you and invest the way that you want to invest. But for me, this is like the biggest miss from Wall Street that I've ever. And again, I'm not somebody that understands this stuff. I'm an idiot, but the way that I view it, this is the opportunity that we've been waiting for.
And that's because you think the take rate's going to double or triple? Because the market has an assumption about take rate in their numbers. The question is it too low? And it sounds like what you're arguing is that number could be double or triple.
Or it could be redefined, Gary. It could be redefined. They could take it to, like, per drive. They could take it, to some other approach to monetizing FSD until there's robotaxi. But it all goes back to the build and the performance of the system being really, really good to give them that opportunity. One other thing we haven't talked about, and I think this is a blind spot for most in the analyst community, is we're all kind of like gaga on looking at the functionality and the capability, and we're looking at other systems too. But in terms of, like, discussing the unit economics and what's the underlying cost structure to deliver that, I think that's sorely missed. And I think you're going to have these two, like guillotines coming down. There's one guillotine that's going to could chop your head off, just like, do you get a system that's functional? And once you pass through that, now you got to get a system that's actually scalable and actually has unit economics that are profitable, that won't put you out of business. Arguably, some of these robotaxi businesses aren't even businesses. They're kind of like large prototype operations that lose massive amounts of money, and there's no real scaler on it where you figure out where they actually break even. And I think Tesla actually has both of those. They're in the lead for both of those things. One is, like, getting a functional system that can volume scale, and also getting a functional system that can scale economically. And I think that's the other kind of blind spot, that you got to look at both those together. The final thing I'll say is these things are very tough to predict. The equity markets missed the ChatGPT moment with NVIDIA. NVIDIA was $120 stock in November of 2022. Major technological moves like this even though Jensen Huang was up there talking about compute, talking about all these partners, talking about this massive ramp up and what's been happening in the background, it was completely missed until they actually got out and reported a massive quarter and a massive beat. Which NVIDIA, by the way, would have had that information on 3, 6, 9 months ago in advance and seen their order book exploding. So anyway, these things do tend to get missed. And then the other point I was making is the economics and the functionality of the system have to work. Many are going to get tripped up trying to do both of those at the same time.
Go ahead, Omar.
Yeah, there's a lot of smart people who look at this and say, curb your enthusiasm, it's not going to work. It hasn't worked for a long time. It's probably going to take some time. But what if it does work? What if what we're seeing continues? They have a faster pace of improvement. What if NVIDIA keeps putting out faster chips, and the chips get faster, more of them get put out? You can now train these models much faster. The compute constraint is alleviated. You have more data being gathered of a greater variety of cases. You have a larger user base. I mean, here in San Francisco, I'm taking driverless cars all the time now. So you have a guy here who said, I'm going to launch a fucking rocket. And they sent the rocket up 3 times, it exploded. They were out of money. They took the pieces, gathered them together, some spare parts, they made a 4th rocket, they achieved orbit. You have the Starship, it keeps blowing up, and everyone's laughing at them in the media. And they say, fuck it, they just keep putting them up there, and they get the thing to space. And that's what FSD beta 1 through 11 was like. It was like the rocket went up and it blew up. And everyone could see it. Everyone could run it on their own car. There was no lying about it, like with one of these other self-driving systems where they're so contained. You could really take it anywhere and see all its failures. And everyone laughed at them. They kind of dismissed them. But you look at what's happening in AI, you look at how common it is to take a self-driving car here in San Francisco now. And progress is really happening. At some point it will happen. We can only debate about what year it's going to be. But I think they're doing it. So what happens if they do it? I mean, a lot of things could change. If people start to realize that you can just buy a self-driving car for $35,000 and get 3 free months right now, you could see potentially not only the margin on the cars materially exceed the street's expectations, just with, a slightly higher percentage of people subscribing. You could see the demand profile for the cars change dramatically, where they're no longer just this sort of commodity EV in a market where every brand, and you have these Chinese startups that are making EVs and exporting them. It becomes not just another EV, but one that's highly differentiated. That could change the demand profile materially as well. So, probably safe to assume that it takes time, it takes a lot of hard work still. But we're in kind of an inflection point. You're seeing people's reactions now. They're promising a faster pace of improvement. And if it does happen, which it kind of seems like it is happening, then everybody's negative expectations, everybody's focus on the auto business and the growth of the auto business, we're going to look back and laugh at it when we
Yeah,
look at
exactly.
what the growth trajectory of the company actually ends up becoming.
That's why I wanted to ask you, Gary, because I really just need to understand, do you really think that institutional investors and investors in general, even if in 2, 3 months, 4 months, 5 months, the FSD 12.5 and 13 is really, really, really good, it doesn't matter because it's not going to increase the subscription and take rate significantly, and even if it does, it doesn't really incrementally add much, and then until you get to robotaxi, you're not going to value this until you can measure it. You know what I mean? Like, what does it need to happen for you to really realize, oh my gosh, we are on path to robotaxi. It's inevitable it'll happen at some point in the future. High probability it will. What will need to happen?
So numbers matter, right? Stock prices are driven by volumes and earnings. And so right now, if you think about the average portfolio manager who owns Tesla at Fidelity or T. Rowe or Capital Guardian, they can look at the $25,000 car. That's probably the thing they're most excited about because it dramatically expands the Tesla TAM because you're going into a segment that is huge and you're going up against Toyota Corolla and RAV4 and other stuff that is pretty cheap. So that's probably the most exciting thing, even though the profit margins on that is very low. Cybertruck is probably second because if you get to say 250,000 vehicles a year at, let's call it, $15,000 profit per vehicle. That's like $5 billion or some number. It's like $1 a share in earnings. This third thing, which I would say, let's not call it robo-taxi because that's too far out for people. Let's just say that the take rate on FSD doubles from where it is today in people's models. And instead of assuming 12 to 15%, they start assuming 25 to 30%. Okay, that's potentially a third way that you could get the stock price to really move because the earnings potential on that is very big. And so if you're right that, come 5, 6 months from now, everybody sees this thing as, borderline level 4, and Tesla's about to say, we're going to take the liability ourselves rather than put it on the driver. And I think that would be a big move for the markets because they say, wow, it must be really, really good, or they wouldn't do that. Then I think people start putting a much higher valuation on, let's just call it FSD. Let's not call it robotaxi yet. Because I do think that's the likely next step. If it's really as good as 12.3 seems to be, and it really proves out that it's 99 point, let's say, 9% intervention free, then people will put a much higher take rate on it, and it won't take that long. And if that's true, the opportunity for the stock is very, very high. Because right now, nobody assumes a 25 to 30% take rate, I can assure you.
Perfect. Thank you for that. Now we're getting better. I'm understanding you better. Scott, do you want to join in?
Hey guys, thanks for having me. Just a quick comment and then a question. We're just excited up here with the FSD subscriptions hopefully coming to Canada. If anybody from Tesla is listening, we're really excited about that. The CEO of the company I work for, he has a Model S with FSD, and he's often just taking people out and showing it off, and he loves Tesla on that. And I think that that's been the main thing. Like all the different conversations I've had about Tesla and all the different details I've shared, and I'm over 200,000 kilometers on my Tesla, and people are kind of watching me. That's nothing compared to when they get in the car and they're just amazed. And the Cybertruck is just amazing people. I think that the main thing for FSD that people aren't realizing is how many people it sells a Tesla to. And I think Omar has shown, how many people he just takes for a ride, and they just grab that technology and they can't forget about it. And I think that they're getting subscriptions to people has been a big deal. We've had that opportunity in the States, but not in Canada. I think Europe and China having that turned on. You're going to see a massive amount of middle-class people that are looking at their RAV4 or looking at their, Nissan SUV and saying, no, I'm going to get a Model Y because it could do this. So it's pretty exciting for me to be able to have that FSD opportunity. Second, I just had a quick question because I wasn't sure, Gary. I know you're obviously paying close attention to Troy. What do we think the delivery for Cybertruck will be this quarter? And do we have an idea of the run rate right now?
I mean, right now the run rate's like 200 per day, and I think Troy's number, the last I saw, I think for the quarter was like 2,900, something like that. It's tiny. It's not a big number, and I think that's ramping up though. When you get to the end of the year, he's up at like I don't know, 2,000 a day once you get to the fourth quarter. So I don't think the first quarter is going to matter, and I don't even think they're going to break it out for us. But I don't think the Cybertruck is really meaningful yet, and they've said they're losing money on it. But I think once you get up to let's call it 50,000 a quarter, or I think his choice numbers for the fourth quarter, if I remember correctly, are like 25,000 for fourth quarter. Then you're going to start making money, and it go back to the math I said. If you're making 250 a year, and the pickup segment's 20% of the business in the U.S., 250 a year, and they're making say $15,000 a truck, and multiply that out, and you take 1 minus the tax rate divided by 3.5 billion shares, it's $1 a share in incremental earnings. It's huge. And by the way, for this year, they're charging everybody $20,000 more to take early delivery. So Cybertruck is potentially huge. But I keep trying to figure out, okay, is that in people's numbers? I think it is, and I think the model, what we used to call the Model 2, is in like 26 numbers. But what is not in people's numbers is like a 40% take rate on FSD. I mean, people don't use anywhere near that type of number. So if you could just double what, the FSD take rate is in people's numbers, that's got to be worth probably 25 to 30 cents a share. And again, put a 40 multiple on it, it's a decent sized number that I think people will come to that realization pretty quick if FSD 12.3 is as good as everybody says it is.
So let's assume that 2 months from now, the FSD is vastly improved from 12.3, as Elon is suggesting. When would we now hear the next update of uptake rate? Omar, do you think it would be, is that something that they would share during the earnings quarterly call? Is that something they would just share outside of that?
They don't.
Well, they don't break it out. So they
don't.
would have to start breaking it out as Gary has suggested. And again, the only reason I can think to not break it out is because the numbers don't look good. If numbers look good, you always love to share them. So maybe if, for example, version 12 can drive some growth, then they can share those numbers. I think if they hit 500,000 users, they'd want to share that. If they hit 1 million users, they'd want to share that. If even after V12, you're not seeing growth in users or you're still seeing churn, then the conversation has to go to playing with pricing or free trials or the business model to try and drive the level of adoption you're expecting.
No, yeah, but no, they did say that there's 400,000 users, and then we said it's flat from last time because they have
And
been
then they
reporting that.
stopped breaking it out, right? So after 400,000, they never shared it again. So but then on the recent earnings call, they said, yeah, it's still 400,000. So that tells me people bought it on subscription, and then they canceled their subscription because they said this thing kind of sucks. But you can totally get them to subscribe again and try the new version, and maybe they'll want to keep it.
Here's the
But for a
problem.
lot of people, it's probably just too expensive. 2,400 a year.
It's a
It better
lot.
be damn good for that. That's like an Apple Vision Pro level purchase.
Yeah, Herbert. Here's the problem. If you take 400,000 times, let's assume everybody rents it. So it's a SaaS model. 199 times 12. Let's assume it's all margin, incremental margin, times 1 minus 20% tax rate. That's only 20 cents a share. So even if that take rate doubled, okay, so you have 800,000 users, it's only another 20 cents a share in earnings. That's only, what, $10 on the stock times a multiple of 50. So it's not a huge number. But if you could get that take rate to be much higher, you could get a lot of people saying, I'm going to try this and I'm going to stick with it, to Omar's point, then, people will put it into their earnings models. But today, the average portfolio manager is skeptical. They just don't, they need to be proven that this thing is really as good as everybody says it. And when Elon comes out and says, over the next 2 weeks, we're going to have 3 significant, that matters. And when people post videos showing that this thing is as good as it is, that matters. The average PM could say, even though we've been promised this for 5 years and it hasn't happened, this may be happening this time. They will take their estimates up if they believe that the take rate's going to go higher. Assuming we're just ignoring robotaxi. But that's the second level effect, is once it gets so good, that it's 99.9% intervention free, then people will start putting robotaxi type numbers into their models. But they don't do that today. They shouldn't. Let's put it that way. So I'm back to what do people who own the stock get most excited about? The $25,000 vehicle is probably number one. Cybertruck getting up to about 250,000 vehicles a year is number two. And a very distant number three would be FSD. If we can get a take rate of double or triple what it is today, but it's not that they're very distant relative to those first two.
That's Yoda.
Yeah, I just kind of want to say that this moment feels a lot like 2019 when it was maybe around a difficult situation on a ramp up of the Model 3. Now, of course, this time Tesla isn't risking bankruptcy or anything, but I think the challenge is at that level. It's sort of a make or break the future of the company moment with FSD. And I think about what Omar was saying before about SpaceX. It used to be that we would make popcorn when the Falcon 9 is taking off and we want to watch the landing. And now we just see that in our X feed and we scroll past it. I think they may have launched one today, for example. And so I think the engineering talent at Tesla that's tackling this AI problem, in aggregate, if you think about on one side photons, on the other side actuators, the amount of work that goes into it includes battery technology, making a profitable EV, manufacturing potentially their own chips, but also using NVIDIA's chips, the software AI side, and then most importantly, the OTA updates that allows us to get the iterative versions, and many more things are in between photons and actuators. And I believe that it's a matter of time for the engineers at Tesla to figure it out, much like they did to figure out how to assemble those tens of thousands of pieces in a profitable way to make the Model 3.
One of the things that I think I disagree with is that this is not similar to 2019. In 2019, Tesla was trading at roughly a $35 billion market cap with $25 billion in revenue. So that's it had a valuation of about 1.5 times sales, and now it has a valuation that's closer to like 6 times sales, or about 4 times higher than 2019. 4 times higher as a multiple of sales. So it's a little bit different. And in 2019, the Model 3 and Model Y were just ramping up, and they were about to get on this S-curve of rapid growth. And today, Model 3 and Model Y have both sort of are on the top of the S-curve. They've already sort of matured in terms of both lines have matured. So just to keep up the same volumes, Tesla has to do refreshes and updates and things of that nature. So it's quite a bit different. Their growth is going to come from Cybertrucks, potentially energy products, and future products at $25,000 model or whatever, which has not even begun yet. So it is a different. I would say it's not the same opportunity. And one of the other things that I think a lot of people underestimate is that this whole comp package for Elon has to be resolved, and Elon has to get a new comp package. And for him to sort of try to solve some of Tesla's biggest problems, including sort of Cybertruck ramp and FSD and other things that might affect the price of the stock pretty significantly, if he solves those problems before his comp package, then all of a sudden his comp package gets priced at the higher price point of the stock. So he has to solve these problems after the resolution of his comp package. So he has sort of no motivation right now to solve these problems before his comp package is finalized. And you can kind of see that by his actions too. He's not actively trying to solve these problems in the same way that he was in 2017, 18, 19, and so on. So I think all of these things are going to play against Tesla from a stock price standpoint in that, you know, it's probably going to continue to be rocky for most of 2024. So those are definitely things to consider.
Well, I mean, I started believing what you were saying also, Hamid, but I mean, they've increasing compute power. They're showing you that FSD 12.3 is a massive step change improvement. They're now talking about every 2 weeks having updates to that. They've shown you drops every couple weeks on a new demo of the Humanoid bot. It's kind of funny where, I don't know, maybe funny is not the right word, where, you know, this is the moment when energy is finally showing up as real significant dollars. There's going to be growth in energy this year. You've got the bot, you've got the FSD making some step change improvements, and that this is the year that everybody thinks, oh, you know, it's a dead year. Okay, I guess I get it when you look at it from earnings and you look at it from auto. I get that wholly, and I can see why the stock is reacting the way it is. But it's also just funny that this is the year that people are talking that way, as compared to last year, for example.
Well, but it is Herbert, short term versus long term. So in the short term, volumes and earnings are going to suffer this year. Earnings are going to be down for the third year now. You know, they went from 410 to last year 310. Will be 270 this year. Volume growth has slowed dramatically, and those are the most important metrics that investors look at in a growth stock. But you're right. If you go out a few years and you look at FSD and then robots, you know, it's potentially huge if you go out more than, 12 months, but the market doesn't pay for that. They're very short-term focused, and that's the challenge with Tesla this year. And Tesla doesn't help itself because they won't break out AI separately. And they use these terms like we're in between two growth waves. And what are the two growth waves? Model Y and the $25,000 vehicle. They're not saying, FSD is a growth wave, and they're not talking about robots as a growth wave. So that's the challenge, is that they really are not. And I don't know, maybe it's because Elon's comp package isn't done, as Hammond said. I don't know why they're not talking about this that much. And, the average investor doesn't pay attention to FSD because they're skeptical after 5 years of promises, but maybe because they don't, they do the math like I do, and they say, okay, even if the take rate doubles, it's not a huge increment to earnings, right? But robots could be a huge, if they can get FSD right, they should be able to get robots right. But nobody's putting any value for robots in their numbers either.
Yeah, that's exactly right. Fundamentally, Tesla continues to be an extremely healthy company and continues to make progress. He's not going to slow down progress. I mean, he definitely is setting up the company for huge future success. But the reality is that he's also not spending all of his time in solving some of the big problems that he could be. And part of the reason is that if the stock price skyrockets this year before his comp package goes into effect, that actually hurts him pretty significantly. And they have to figure out how to deal with this sort of $57 billion comp package that has been canceled as well. So those are pretty significant overhangs that need to be resolved in one way or another. And the best way to resolve them is to resolve them while the stock price is suppressed, and then sort of like start solving the external problems of revenue growth and profits. And until that's done, you can kind of sort of anticipate that there's going to be rockiness. The stock's going to do what it's going to do. The company's progress is going to be what it's going to be, but it's not going to be accelerated in the ways in which Elon can do magic.
Go ahead, Omar.
Yeah, I just think this is just an incredible time at Tesla because you have things happening here like the launch of FSD 12.3, and there's a lot of sort of just completely delusional thinking going on. Like, oh, okay, Elon's not going to make anything happen at Tesla because then his strike price would be higher on the options. When, first of all, you don't even know that new options are going to have to be written yet. It could be that they win an appeal. It could be that a number of different things happen, that they change the structure entirely. And, even so, even if they had to write the higher option strike price, you're going to make the business not do well so that the stock price tanks and you get a lower strike price. You're going to own 25% of a bunch of rocks if you let the business fail so you can get a lower strike price. I mean, this is like a
That's clearly
conspiracy
not what I'm
theory.
saying at all.
But you hear this kind of thinking from shareholders all the time because people can only look in the rearview mirror. In November 2021, was anybody saying, "Oh, I see a lot of trouble for the business up ahead"? No. Everybody was euphoric because they saw the stock price going up. Now people see the stock price going down. They say, "Oh, nothing good can happen." They come up with all these theories. Oh, Elon doesn't care about the company anymore. He doesn't want to let the stock price go up. It's not grounded in reality, in my view. I
I
mean,
love the random
why would you
arguments
release
that you
FSD
create in
beta?
order to sort of make your
Why would
argument. I am
why
not
would
saying
you
any of those things.
why would you release FSD beta 12.3 if you didn't want the company to make any progress? It doesn't make any sense.
Because you
Why
don't
would you be
prevent
releasing the
progress. You
Cybertruck?
don't actively go in there and prevent progress from happening. Elon's, of course, wants Tesla to succeed. It would be a joke any other way. He's not going to stop the progress of the company. That would be, obviously actively doing that would be a terrible thing. I mean, it would be not only criminal, but it would get him into hot water in other ways. But the reality is that there are things he could be doing that he's not doing. And you will see those things happen as soon as his comp package is resolved. And I guarantee it, it's going to happen. At some point, it's going to happen. And then you're going to see an accelerated set of things that come out of Tesla. And all of a sudden, problems get resolved faster than they do today. And that's just the way Elon works. He's just like concentrated efforts in now it happens to be on X or other areas of the company or other companies, and eventually it'll come back around to being on Tesla. And that's going to be something that happens in the future.
I mean, I don't think you're giving Elon's team at Tesla the proper credit that they deserve. They're going to be just fine continuing on with progress, and those guys are geniuses. They're gonna if Elon decided that he was gonna take a year off, you can be sure that they can design a roadster that could blast off just fine without him. It's what Elon will do if and I think you're way off base, because Elon doesn't care about money at all. He's looking for control of the company to protect the AI. That's it. It has nothing to do with money. I know you think about money, and you probably have to answer to some people who wondered why they bought some Tesla stock when they shouldn't have. But Elon doesn't give a crap. Obviously, he doesn't come out and say, "Here's some good things about the stock because it's going down." He doesn't care at all. He's interested in the future. And if you think that he's going to tank the stock so that he can get he's interested in control of the company. That's it. And if they came out today and said, "Here, Elon, here's 15% of the voting rights, but you'll never get any more stock or any more money out of the company," he would take it instantly, because
Scott,
it's all about protecting the company.
That you can't say that Tesla has geniuses running it, and therefore I'm not giving enough credit to Elon. At the same time that you say that he deserves a $57 billion pay package because he is the reason that Tesla is what it is. So you can't make both of those arguments at the same time. Either Elon.
Yeah, I don't care how much the pay package is worth. So you keep saying $57 billion. It's not about that. It's a 12%. That's what the important thing is. It's 12% voting rights. And he doesn't care about the money. If the stock was $50 right now, he'd want the same amount of shares. It's not about the money.
But
it's about keeping his technology in his hands.
Of that 57, people who argue he deserves every single penny of that $57 billion, they argue that he is the one making Tesla stock go from $50 billion to $600 billion, right? That's the argument that people make. So you can't be making that argument at the same time as saying, well, no, he's not that relevant to the stock price of the company. At the same time, you can't make both of those arguments. So either one is true or the other one is true.
If you want to go back to 2018, when he got his comp package, there was no battery day, there was no FSD, there was no GigaPress. There's a whole bunch of things that he had filed in his drawer that he unleashed. That is 100% true, because we said there's no possible way you're going to get to $600 billion. And he was like, "Oh, yeah?" And if we do something like that again, and you say, "Okay, well, you'll never get to $5 trillion, there might be something, hidden away that we couldn't even imagine as well." But as far as the fundamentals of the businesses, the business startups that have been going on since 2018, none of that is affected by the fact that he didn't get his comp package. That's all still there. I do think that he deserves those shares. They're valued very high right now, but it's more important that he can keep control of the company that he built. As somebody who's helped build a company, if somebody comes in and just takes that away from you, that's like taking your kid. That's like taking your property, right? So that's what he's really worried about. And I think it's just a little bit insulting to the team that he's built, and they've been there for a while, right?
Let's change the topic, guys. We've had enough of this. I mean, unless you can tell me that, I would totally agree with you. Elon's comp package is priority number one for the stock. Does it impact FSD progress? Does it impact FSD's impact to the stock? What do you guys think on that?
Well, Herbert, all I would say is, again, and this is just factual. I think Elon's, doing the best he can, but I'm just using his own words. He tweeted saying he would not maybe push as hard for artificial general intelligence unless he had control. So that's not me saying it. He's saying that. He's saying, so there's maybe a part of him subconsciously. Let me just finish and then you can retort it. I'm just responding to what Elon said. He said that he might not push like something like Humanoid as fast as humanly possible. I'm just paraphrasing, and because he's worried about it. I get why he's saying it, but I'm saying he's still saying it. So if in the back of his mind he's worried about this this great technology being abused, or he doesn't have control of it in the way he does, that means he won't push as hard or as quick. That's just common sense, and that's what he specifically stated.
Okay, so you're suggesting that his statement about concern about AGI getting out of control and humanoids.
More with the humanoid, less
sure.
with FSD, because he calls FSD narrow AI. I'm talking about more of the
exactly. So
Optimus.
I'm just trying to bring it back to the conversation at hand. I mean, we're expanding to be, a lot of fun conversation. I really want to have this, but right now we're still talking about FSD progress and impact the stock. I just want to bring it back. That's all.
Herbert, let me give another example that is closer to FSD and the Cybertruck ramp, because the Cybertruck ramp is a thing that can actually impact revenues this year pretty significantly, and has an effect on the stock price, right? If instead of 2,900 deliveries or whatever, they were making 10,000 deliveries and it was ramping up faster, it would have a huge impact on the stock price. So if, for example, Elon did a sleep at the factory trying to figure out what the hell is the slowdown on the Cybertruck ramp, and he could solve some of those problems by doing the same thing that he did with the Model 3 ramp. If he did that today before the comp package gets resolved, it might trigger the stock price to go up, right? And that again would hurt him. So his incentive is not there to do that. I'm not saying
agreed. Again, let's
there.
change the topic again. I mean, he did just approve an investment in the Buffalo data warehouse. Okay, I mean, let's FSD. I just want to bring up to FSD.
What do you guys think he does when he's in Texas? I mean, this is a guy who's working literally all the time. You email him at like 3:30 a.m. and he's still there at the Gigafactory looking at Cybertruck production and things like this. You think it's a new thing for him that he's running multiple companies? He's been running multiple companies since before he even got involved with Tesla. He was already the CEO of SpaceX. This has been his life forever. So, I mean, it's just ridiculous. Like, people have just really let their imagination run wild. Oh, he's holding back the ramp of Cybertruck so he can get more stock. I mean, can you guys hear yourself? It's ridiculous.
He's the one who's asking for more stock. That's pretty ridiculous.
He didn't get any stock. We've told him that he could have this options package if he accomplished this goal, and we didn't give it to him. I think we should give him what we promised him, and we should give him a new comp package too, with tranches that stop at 4 or 5 trillion. Why not? What do we have to lose? If he can't do it, then we give him nothing. If he can do it, then he deserves even more options if that's what he wants.
And that's fine, Omar. But that's fine, Omar. But what I was saying isn't ridiculous. Elon said it with the one little thing. I'm not saying he's not trying hard. He's working hard. I'm saying he said that unless he had the 25%, he wouldn't push hard on general intelligence, which is more Optimus humanoid. Did he not tweet that? Am I imagining that?
No, you just misunderstood what he was saying.
He's okay, so I misunderstood it, but it could be easily misunderstood, right? Because it sounded like that.
I mean, you can misunderstand anything, but that doesn't change what the reality is.
Right, but you to say it's misunderstood, right? If he says he physically said that, you're just choosing to ignore what he's saying, and he don't really mean that. He don't really care. He's still pushing his hard. He said it himself, so I'm being a little facetious when I say misunderstood. There's nothing to misunderstand. He said it. He tweeted it.
You did misunderstand him because they're not stopping progress on Optimus. They're accelerating work on Optimus. right?
So then why did he say, I don't know if I'll push as hard if I don't have control on general artificial intelligence? Unless I have control, I might not want to do it inside Tesla, and I might not push as hard. Why would he say that if he doesn't mean it?
Well, he's essentially, in relation to the comp package, saying, I need control of the company in order to put my effort into this as opposed to starting a different company. He's essentially laying out the case for why he should have the comp package. If you look at the comp package case, they were basically saying, look, he didn't need this much. He would have been the CEO of the company anyway. It's not going to materially impact everything. If you came away from that tweet with the impression that they're slowing down work on Optimus until he gets his comp plan, you misunderstood his words. And it happens all the time. People misunderstand his tweets every single day. So it's not really that surprising. But if you believe that they're not working on Optimus as much as they can because his comp package needs to be finalized, that's just incorrect.
By the way, that tweet of his where he was saying he might not be motivated was before his comp package was canceled. He was asking for a new comp package that brings him up to 25%. So that's the irony here, is that comp package at that time was unknown as to whether or not it was going to stick or not. But he was talking about a new comp package. So the combination of these two problems, his old comp package getting canceled and getting him a new comp package, have to be resolved in order for the stock to go anywhere. And that's just, that doesn't mean that the company is not going to make progress while those things are being resolved, but it's hard to imagine a scenario where the stock doubles or goes up significantly from here until those things are resolved. And if you're an investor in the stock and you're expecting the stock to sort of like, you're not sure why it's trading at 170 or 160 or 150. I mean, these are just facts, right? Like it needs to resolve. It's a huge hangover over the stock.
I mean, it might have been a surprise for you, but he obviously knew about it. He was involved in the case. He had been deposed in the case. He had lawyers talking to him about the case. And they told him, look, it looks like the comp package is probably going to get revoked, and this is why it's going to get revoked. And so this obviously frustrated him, and that's why he came out and started making statements about it. I believe that ultimately none of this is really going to matter. It's all very dramatic. It's a lot of noise. But in the story of the growth of EVs and clean energy and AI robots, it's a footnote. And I think it's all going to be resolved. You have overwhelming shareholder support for the proposal. Ultimately, the will of shareholders will prevail. And all these people trying to say, oh, the company's doomed because of this decision, they're wrong.
Go ahead, Scott.
Yeah, guys. A couple of positives, Christian. A couple of positives that I think that get forgotten in people's models a little bit. Tesla's conversion rate last year was fantastic, and I hope they break it out and they give us an idea, or at least mention it in passing this earnings call as well. If they're still at an 85 or 90% new customer base sales conversion, that what I mean is 1.6, I think 1.62 million or so of their sales last year were people that had never bought a Tesla before. And I think that's very important because of the fact that they retain their customers. Very few people are switching from Tesla back to something else. A lot of us have 2 or 3 Teslas, or we're on our 8th Tesla, or like Omar, like 17 Teslas or whatever he's up to now. But I think that's a really positive, and I'd love to see if that continues. And also I'd like to know how many of those are taking FSD. Of the new people that come to Tesla, how many of those are experiencing FSD, or is it just the people that were, transferring? Secondly, I think we're all just forgetting energy. We're just sitting here talking about cars and FSD and forgetting about the fact that we're going to have, probably $40 billion a year energy business very soon. So not really concerned about the future there.
I wanted to answer a question that was asked earlier. And the question is, what percentage of how close to the March of Nines is Tesla right now? And I'd say for the US globally, we're around 97%. In a state like California, it's probably like 97.1. In states like the Dakotas or Wyoming, it's probably closer to 80, maybe sometimes hitting 90. And there's just a lot fewer people in those states.
Okay. Thank you so much, Omar. Gary just left as well. Appreciate the conversation. Join us for Cyberbulls every week. And this was a great one again. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.